Turning now to the markets, gold futures taking a plunge following the longest rally since 1980. Frank Lesh is a trader at FuturePath Trading. He joins us now from the CME in Chicago. Frank, thanks so much for your time and for your patience as we did that interview with the senator. Frank, what's going on in the gold market?
Well, clearly we bid up the gold market in anticipation of possibly the worst outcome for the debt deal here in the U.S. And of course, we're also pushing gold higher on the European debt problems as well. Now, today, President Obama made the statement that there was progress in the talks, and things do sound a little bit more conciliatory on each side. So, we've seen traders take profits. This last gold move was maybe a little bit too much too fast. As you mentioned, the biggest move since 1980. We were up 11 days straight, and a lot of times when the market moves in a parabolic fashion like that, it's hard to hold those gains. It just tells you the nervous activity going on in the markets today. But, if the debt talks fall apart here and look worse, we're going to be right back up with the gold in here. And most of the drivers pushing gold market higher right now are still with us.
Frank, back in January, though, you didn't think gold was going to be this high, did you?
Well, we're looking for the market actually this year to hit 1630 to 1650 here or so, but ultimately I think there's upside possibly up to 1700 or so in the right circumstances. So it's it's hard to have targets on the market when you're up in new territory, and you just sort of have to go with the flow for the market. And currently the flow is upward, trend is up, and it's a strong upward trend.
Frank, how much of this has to do with a lack of confidence in government and in currency?
Well, a very great deal of the gold price movement is predicated upon currency volatility out there. I mean, if you're holding dollars and they're losing value, you want to hold something that's going to hold value, and that's gold. On the other side of the pond here, you go in, if you're in euros and you're losing value in your euros, and right now you look at the dollar, you look at the euro, and that volatility just forces you into the gold market for some safety. So that safety bid will continue as long as that currency volatility continues. Political instability is rampant right now. Economic problems as well. So all of these factors, and none of which have solved at the moment, are going to continue to support the gold market.
Frank Lesh of FuturePath Trading from the CME in Chicago. Frank, thanks for your time today. We appreciate it.
Thank you, Mark.